Apple financially is very, very logically run. I think that in terms of a business operator, I don't know enough about technology to evaluate technologists, but he is very, very, very good. Everything he does makes sense.
He is the CEO, Tim Cook. Buffett on Fox Business back in May, waxing poetic about CEO of Apple, Tim Cook. Well, one thing is for sure, the Oracle of Omaha himself was probably popping confetti in his office yesterday, just as Apple became the first company ever to close at $1 trillion market cap. No wonder Buffett is thrilled. He owns 5% of Apple, 240 million shares today, worth nearly $50 billion. One thing Buffett and Apple do have in common, they are both sitting on huge piles of cash. Apple reportedly has about $243.7 billion in cash on hand, and during its earnings call has been long building up its cash hoard. While some people might feel that's a disadvantage, in Apple's case, my next guest, who started buying Apple at $11 a share back in the day, has some comments on that. He is Florence Capital Advisors founder and CEO Greg Hersch. And Greg, you count Apple as your biggest holding.
That's right.
$11. What year was that?
It was about 2003.
2003. And what made you keep adding to it and not selling it?
Well, I recall when the iPod first came out, I was sitting in a restaurant with some friends, and a friend showed it to me, and it looked like something I'd never seen before, because I hadn't, and nobody else had really. And it was just so clear that it was going to be a disruptive, incredibly revolutionary product that, and the stock was very cheap at the time.
Then you must have been thrilled to see them come out with the iPad and the iPhone. What do you want to see now with that cash pile? Because that's your issue, is it not?
Well, I understand that that's an issue for a lot of investors. I think that, you know, and you mentioned Warren Buffett having a huge cash pile now, too. I look at cash as optionality. It gives you the opportunity to take advantage of opportunities that you might not otherwise be able to do in market downturns, economic downturns.
Buy things on the cheap.
Buy things on the cheap.
Apple doesn't acquire stuff. They like to make it on their own. And let's go to their semiconductor chips. Right. They've kind of hinted, or at least a lot of the market believes, that they will start making their own chips by 2020 for the Mac, leaving a company like Intel frozen out, right?
That's correct. And, you know, listen, when you have that much cash on hand, I think, A, that provides a certain measure of a floor, if you will, on valuation. Yes, historically, they have not been an M&A machine. Their biggest acquisition to date was $3 billion. That would not put a dent in their cash hoard. But I do think as the company continues to evolve, as you see its services business continue to drive growth, as well as some of the international initiatives they've done, along with the product cycles that are to come, with an installed base that they have, right. The cash drag, if you will, as some people look at it, is not a concern to me.
Okay.
And, you know, Mr. Cook has done a phenomenal job of delivering shareholder value.
Is Warren Buffett making the same mistake people made when they all felt that Apple would never be as good once Steve Jobs had died, by saying that it's not the horse, it's the jockey? He has an iPhone somebody gave him, he doesn't know how to use it, doesn't care. He keeps talking about the leadership.
Listen, I completely agree with Mr. Buffett on that point. I think I could not think of a better leader to have taken the reins from Mr. Jobs after he passed away. I think Mr. Cook has done an incredible job of stewarding the company through a challenging time after Mr. Jobs passed away.
Well, we got to go, but let me guess, you're not going to sell any shares anytime soon.
I think the forecast for the company looks really good, and we continue to be very constructive on the name.
Greg Hersch started buying Apple at $11 a share. That's a good lesson to a lot of people. Thank you very much. Good to see you.
Thank you, Liz.